Welcome to this explainer. Today, we're going to unpack how a century-old real estate giant has rapidly and frankly quietly repositioned itself as a completely critical operator in the generative AI space. We're talking about CBRE Group. Now, if you know the name, you probably associate it with traditional, maybe even somewhat boring commercial real estate, office leasing and standard property management. But over the last couple of years, leading into 2026, CBRE has aggressively become a massive powerhouse in the tech world's AI infrastructure buildout.
All right, let's take a quick look at our roadmap. We are going to cover 1. The AI data center boom. 2. CBRE's strategic infrastructure pivot. 3. Breaking down the financials. 4. A massive global workforce. And 5. Wall Street's investment outlook. Let's dive right in. Section 1. The AI data center boom. We're going to start by looking at the macro environment and the massive physical requirements of artificial intelligence. So who's the hidden winner of the AI boom? Well, it's really easy to think of AI as something abstract, right? Something that just exists up in the cloud. But the reality is that the cloud requires an enormous amount of physical space right here on the ground. Well, everyone focuses on chip makers like NVIDIA or the hyperscalers, those massive cloud providers like Meta or Microsoft. The real bottleneck is the physical infrastructure. We're talking land, power, and water. You can have literally all the advanced chips in the world, but if you don't have the heavily fortified, power-dense facilities to house them, the entire AI revolution just stalls out. And that is exactly where the commercial real estate services industry is stepping in. The structural shift in this industry is honestly incredible. We've moved away from standard retail colocation facilities where multiple companies rent shared server space, which historically might use, say, 20 to 50 megawatts of power. Today, hyperscalers are demanding dedicated single-tenant AI mega campuses that use 500 megawatts or more. That is an absolutely absurd amount of power. These mega projects require multiple on-site substations, brand new high-voltage transmission lines, and just incredible amounts of cooling capacity. It's a completely different scale of real estate. And because of that scale, these mega projects come with severe risks and bottlenecks. Data center development is now this really complex power and land arbitrage play. Sponsors who just happen to have industrial land can't just easily flip it for data center development anymore. Interconnection timelines with utility companies are dragging out 24, 36, sometimes even 48 months or more. On top of that, you've got massive labor constraints and really intensifying community opposition over noise, power, and water usage in places like Texas, Arizona, and Michigan. Moving on to Section 2, CBRE's strategic infrastructure pivot. Let's look at how CBRE's capitalized on these exact bottlenecks to fundamentally reshape their business.
Because these hyperscalers are racing to secure land and power, they need a partner capable of navigating these intense operational challenges on a global scale. And just think about how fast CBRE moved here. In less than 24 months, they aggressively acquired technical infrastructure maintenance firms to capture that market share. In June 2024, they picked up Direct Line Global, a provider of technical installation services. Then, in a massive move in November 2025, they acquired Pierce Services for $1.2 billion in cash. This wasn't some slow, cautious transition, no way. This was an aggressive, capital-intensive land grab by CBRE to absolutely dominate data center maintenance. So the crucial takeaway here is that CBRE isn't just selling buildings anymore. They are vertically integrating to become a primary operator of stabilized data centers. Think about it. A buyer of a massive AI campus today doesn't want to manage the HVAC, the complex electrical infrastructure, or the uptime guarantees themselves. They want a fully integrated service provider. By acquiring companies like Pierce and Direct Line, CBRE shifted from just being an advisor on real estate deals to being the essential, ongoing operator of the physical infrastructure itself. Section 3. Breaking down the financials. Let's dig into the hard financial metrics from Q1 and Q2 2026 to see if this pivot actually worked. Narratives are great, but the numbers tell the true story, right? Get this. There was a staggering 71% year-over-year revenue jump, specifically in their critical infrastructure services segment. That generated over $3 billion in 2025 alone. As reported by Fortune in May 2026, their data center leasing revenue more than tripled year-over-year. This is literally one of the largest single-segment growth rates CBRE has reported in its recent history. And make no mistake, this is a structural, long-term shift, not just a cyclical bump. When we look at their massive $42.17 billion trailing 12 months revenue, it becomes incredibly clear exactly how the bulk of their cash flow is distributed.
Their building operations and experience segment, which houses a lot of these critical technical services, is doing the heavy lifting here. It brought in an incredible $24.36 billion. That completely eclipses their traditional advisory and investment sales. It really highlights how operating and maintaining properties has become their absolute core driver. In just Q1 2026, total revenue hit an impressive $10.53 billion. That's an 18.1% year-over-year increase that comfortably beat analyst expectations. They reported $1.61 in earnings per share for the quarter, totally destroying the consensus estimate of $1.13. This robust top-line growth is a direct result of their ability to capture the massive capital expenditures pouring out of big tech right now. Section 4. A massive global workforce. Executing a pivot of this magnitude requires tremendous human capital. You absolutely cannot maintain 500-megawatt AI campuses around the world without a literal army of highly specialized workers. As of March 2026, CBRE employs precisely 157,788 people worldwide. That represents an 11.5% headcount growth since 2023. While a lot of other companies were tightening their belts and laying off workers over the last few years, CBRE has been steadily increasing its workforce to keep up with the physical demands of this infrastructure boom. This global workforce is heavily concentrated in the US, India, and the UK, which allows them to service Fortune 100 companies across more than 100 countries. In fact, CBRE works with 90 of the Fortune 100 companies. This sprawling geographic footprint is exactly what allows them to manage complex, multinational data center portfolios for the world's largest tech giants. Crucially, nearly 30% of their workforce is dedicated to engineering. And that's a talent pool they're actively expanding through initiatives like their Level Up trade worker partnership with Meta. Remember that skilled labor shortage we talked about earlier? Well, CBRE is attacking that bottleneck head-on. They partner directly with Meta to recruit and train electricians, HVAC technicians, and plumbers across multiple U.S. markets. By controlling the labor pipeline, they significantly de-risk the construction and operational timelines for their clients. Finally, Section 5, Wall Street's investment outlook. Let's look at how institutional investors and analysts are reacting to CBRE's performance ahead of their Q2 2026 earnings call. Wall Street remains generally positive, maintaining a moderate buy consensus as institutional capital chases these downstream AI infrastructure plays. Interestingly, 98.41% of the stock is currently owned by institutional investors and hedge funds. That's huge. Multiple sovereign wealth funds, public pensions, and large insurance companies are waking up and recognizing that data centers are no longer just a tactical bet. They are a core institutional category. This optimism is really reflected in the average analyst price target of $178.86, showing the potential upside the market sees in this strategy. With the stock trading around $138 to $139 in late July 2026, analysts clearly believe that the broader market hasn't fully priced in the long-term revenue streams CBRE has secured by becoming a primary gatekeeper to AI data center operations. CEO Bob Sulentic actually compared this critical infrastructure pivot to CBRE's 1990s outsourcing transition, saying it is at least as profound but much faster. That quote perfectly encapsulates the sheer speed and scale at which CBRE has reordered its priorities. Back in the 1990s, the shift to corporate outsourcing changed commercial real estate forever. Sulentic recognizes that AI infrastructure is doing the exact same thing right now, but at a vastly accelerated pace. So, as we wrap up this explainer, I want to leave you with a question. As AI rewrites the rules of commercial real estate, is your portfolio positioned for the picks and shovels or just the gold? Are you looking closely enough at the traditional companies quietly powering the AI revolution from the ground up? It's so easy to get distracted by the shiny new tech companies, but for sure, the real lasting value might just belong to the companies pulling the cables, cooling the servers, and maintaining the mega campuses. Thanks so much for joining me today, and definitely keep your eyes on the physical foundations of the AI future.